Good afternoon, and thank you for the opportunity to present today. I'm presenting Moneta Gold. We're a gold exploration company. We're listed on the main board, the TSX. We're Toronto-based, and our focus is gold in the Timmins Camp. I will point out there are some forward-looking statements here. All of our exploration is in the Timmins Camp. This is Canada's most prolific gold mining camp. We've just updated our resource last week. We now have a total resource of 11.8 million ounces. This makes us Canada's largest gold deposit, and this is in Canada's most prolific and most well-developed gold mining camp. We have a major strategic holding in the camp. We have over 27,000 hectares of ground. We have a pipeline of projects. We have a number of other very prospective gold projects in the project, but we are focusing on our Tower Gold project. It's a large gold project. It hosts both good grade underground resources, bulk tonnage mineable, as well as large scale open pit resources. We just completed 72,500 metres drilling last year. That was used for the basis for this resource update. The resource update, as mentioned, just came out last week, and we are now in the process of wrapping a preliminary economic assessment around the resource, and that will come out over the next 2 months. We've already commenced our pre-feasibility drilling, so we're doing infill. We're upgrading resources from inferred to indicated, and we have done a small amount of exploration drilling on our pipeline, so there will be a good flow of drill results over the coming months with both exploration and infill drilling. The project, as mentioned, is located 100 kilometres east of Timmins. We own 100% of all our land. Most of the ground is patented mining claims, so we own both the surface rights and the underlying mineral rights. We have no royalties on the Golden Highway portion. That's where most of our resources occur. But we have a 1.5% royalty on the Garrison, which hosts just over 2 million ounces of the 11.8. As mentioned, we have a very prolific exploration potential in the camp. However, our focus is the main project. Metallurgically, good standard metallurgical recovery, 93 to 95% recovery in a standard leach. No fine grinding needed, nice clean tails, low reagent consumption, and very fast recovery time, 24 hours. We're looking at probably 200 to 350,000 ounce production per year in our PEA, which is pending. We see the ability to have good cost savings over many of our peer group. We're located immediately adjacent to a highway. There's gas, oil, there's a number of producing mills, there's major towns and cities within driving distance, so we have no need for extensive infrastructure expenditure, no need for camps. And we see this has now been, extremely a good value proposition for our shareholders. We have 95 million shares outstanding. We're currently trading about $220, so we have about a $210 million market cap. We have a $10 million in cash, and that's enough to take us through all of our drilling this year, all of our PEA studies, and have us ready to finish the PFS next year. We have good analyst coverage. We have excellent institutional ownership, 37% institutional ownership. Most of the large gold funds in North America are shareholders and continue to support us as we advance the project. They can see where we're going in regards to the scale, the size, and the value of the project. Very strong management team. We are building up our project delivery team, and we continue to add that as we move forward, and a very good, well-rounded board in regards to skill set as well as experience. As mentioned, we're 100 kilometres east of Timmins on Highway 101. It's a major regional highway. All of our workers drive home at night. They live at home. There's no need to be working out, away from home. We source all of our gear, equipment, and everything locally. Our main office is in Timmins, so we're very much part of the community. And we also have, in regards to our 30,000 hectare land package, we also have a large 50% joint venture with Agnico Eagle on a large land package. This actually makes us the largest landholder in the eastern part of the camp. And remember, as a junior, this is Canada's largest, most prolific gold mining camp. The majors are here: Newmont, Agnico Eagle, as well as Pan American Silver. We have excellent working relationship with the Waagashig First Nations. We have an exploration agreement with them. They're doing a lot of work for us in regards to contract work. They have 5 other IBAs with other producing mines in the area, so they're very attuned with the mining industry. We're well on the way with our environmental baseline, and we look to have that wrapped up by midway through next year and be ready for permitting. It's an ordinary kriged resource. We use more conservative parameters than our previous resource. We're at 7.5 million ounces inferred, 4.3 million ounces indicated, both open pit and underground. Remember, this is all on one project. This covers a 9-kilometre strike length. We actually have 17 kilometres of prospective ground under tenements, and so we have a lot of upside to continue to grow this project. So this slide is broken out into both underground and open pit resources. We use a 0.3 cutoff for the open pit resources and a 2.6 gram per tonne cutoff. These are the parameters used to devise those cutoffs. The company over the last 2 years has grown considerably. We're initially focused just on high-grade underground. We've gone from 1.3 to 11.8 million ounces over a very short period of time. Part of that was the acquisition of Garrison. So February last year, we acquired the Garrison project off O3 Mining. We acquired all of their Ontario assets, but the latest resource has been all organically derived. So that was from our own drilling. 2 projects really consist of 6 open pits now in 2 main areas, Golden Highway and Garrison, as well as 3 underground deposits. As shown here, it's immediately adjacent to a major highway. There's mills within trucking distance. They're only 25 kilometres away. We have cities, major mining centres within 60 kilometres, and Timmins is only 100 kilometres away on this highway. The resource update came at a great increase in our overall inferred ounces, 70% increase. We added 3 million ounces in the last year at a discovery cost of less than $4 an ounce, and we added 8%, 300,000 ounces to our indicated resources. This is an isometric view looking to the northwest. You can see the 6 open pits, and you can see the location of the 3 underground mines. Remember, this is all bulk tonnage underground mining. There have been PEAs done on the underground mining in 2020, so long hole open stoping, good cheap bulk tonnage underground extraction methods. This is just a quick comparison of our December 2020 resources compared to our May resources. The open pit resources, we had no loss in grade. We maintained the same grade, yet we added 3.5 million ounces inferred and 800,000 ounces indicated. Our underground resources, we increased the grade significantly, and a number of our underground resources were captured in the expanded the expanded open pit resources. So they were converted from underground to open pit. Looking at the 2 main areas, and this is just to compare the Golden Highway open pit resources, significant increase, nearly 4 million ounces inferred, 900,000 ounces indicated. The key takeaway here from Garrison, this is our proposed starter pit, it's a significant increase in grade from about 0.8 grams per tonne to 1.1, and an increase from 1 million ounces to 1.75 in the starter pit there. Views of the Golden Highway area, there's a long section, so there's the underground resources, southwest, west away, the 2 main large open pit areas. Again, a map view here showing the Garrison open pits. These are only 4 kilometres away. Again, a long section, so in the 903 open pit resource, the Garcon open pit resource, as well as their high-grade Garcon underground resources. Looking at selectivity by cutoff, and this is really just to highlight the fact we are able to stockpile lower grade ore. So our proposal is a 0.3 cutoff. Using a 0.5 cutoff, we can stockpile ore, get our grade up to 1.16, 1.2. That increases the head grade, reduces the capital requirements on the project. And here at the underground resources, this is really to show the opposite. At using further bulk target methods, we are able to reduce the cutoff grade and significantly add to our ounces without significantly losing grade. We're still over 4 grams per tonne at a 2 gram cutoff. Looking at evaluation, we're currently trading well under $20 an ounce. We're trading about $15 an ounce. Our peer group is in $40 to $50 an ounce. And remember, this is a prime gold resource in an excellent location in Ontario, Canada, with great infrastructure. We're now the largest undeveloped project in the country, and we're looking to move this forward and continue to de-risk it. Our share price has performed well over the last 2 years, and when we consider it will continue to re-rate, bring excellent returns to our shareholders as we gain value for our large, gold resource. Plans coming forward, we just completed that major resource update. We'll have a PEA out very soon. We'll have drill results from exploration as well as infill drilling coming out. We'll then be moving into pre-feasibility studies. We'll continue to drill. Again, it'll be good continued news flow. We'll get that environmental impact studies completed for next year, continue our community engagement work, as well as to continue to develop our project delivery team. So by this time, by second half of next year, we'll be into pre-feasibility, have an EIA completed and be looking at when we should be starting permitting.